Guys, what a day that we're having here. Alibaba's shares are down almost 8% on the day. JD.com's shares are down almost 16% on the day. And Tencent's shares are down almost 7% on the day. So what exactly happened? Well, you guys probably already know. Those delisting fears have been reignited. And that's what we're going to cover again, once again on this channel. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys? I wasn't even going to make a video today. I just released a video today on Alibaba's quarterly results. And then, of course, this news popped up and all of the Chinese listed shares got tanked today, which was so surprising to me because at the end of the day, none of this delisting stuff was actually new news to me. So let's actually go through the article put up by the Financial Times together and let's dissect what's going on here. And before I even start, I wanted to make this video because I know a lot of you guys are looking to this channel for information on what's exactly going on. There seems to be a lot of FUD in the market, and so I'll never tell you guys how to invest, but what I will do is try to break down the information in the most unbiased way possible. You guys already know I always call out Alibaba when they do things that are dumb, but I also call out the West when they do things that are dumb as well, and I always call out the FUD in the news reporting as well. I try to keep it as flat and fair as possible. And so let's get right into this article. So it looks like the SEC, as reported by the Financial Times, it looks like the SEC has set the clock for the delisting of Chinese companies over the US audit demand. And you guys already know, this is nothing new for us. We expected this, but let's go on in this article. So let's go on to the second slide here. And it looks like 5 companies that are listed on the New York Stock Exchange have been named by US regulators as the first of as many as 270 that could be delisted if they do not hand over detailed audit documents that back their financial statements. And those companies are Yum China, Biotechnology Group's Baidu, Zylab, and HUTCHMED, and technology company ACM Research. Now, that seems to be what triggered the sell-off in Chinese traded stocks that are traded on the US exchanges. And I'm not gonna lie, that first name really hit me personally because how dare you go after people's fried chicken? Look, I grew up in the hood. Do not mess with our fried chicken, man. Do not. America, get your act together. Go after their bio companies or whatever. Leave the fried chicken alone. I love it. Okay, let's move on. The Holding Foreign Companies Accountable Act set a 3-year deadline for companies and their auditors to comply. And so what exactly do they have to comply to? And it really comes down to handing over audit documentation and files to the SEC or the audit firm, which inevitably goes to the PCAOB of the US. The PCAOB is a body that oversees American firm audits. And so they are the auditor of the American financial auditor. And I believe, you guys correct me in the comments if I'm wrong here, but I believe that the PCAOB was created in response to sort of the Enron scandal where you had the gold standard of the audit companies by the name of Arthur Andersen, which was actually fudging audit documentation because they're being paid so much by Enron. Now, guys, correct me in the comments if I'm wrong about that's the reason why the PCAOB started, but I believe that that's what it was. And now what the CSRC, the Chinese Securities and Exchange Commission, stated, or at least a spokesperson of the CRSC stated, is that regulatory authorities in China stick, as always, to openness and cooperation with dealing with international affairs. They respect the PCAOB's mandate to oversee the quality of audit works. That makes a lot of sense that the PCAOB wants to operate the way that they have operated in their own jurisdiction. But they got to understand that they're dealing with international companies. I understand that there's those international companies that are listing in the US, but let's not pretend that the US doesn't get a benefit from purchasing goods and services from China. So why harm them in any way as opposed to trying to do a better job of working with them? And this is what the Chinese regulators said. They said in the past few years, the CSRC and the Ministry of Finance of China have for several times proposed two US regulators the joint inspection solutions to address remaining issues in supervisory and enforcement cooperation. So essentially what this comes down to is data privacy, or at least that's what it seems like to me. They don't just want to hand over all the documents to the PCAOB. They want to be able to have joint oversight to make sure that there isn't any data privacy risks or data privacy leaks as a result. Now, the Chinese regulator did say that they welcome the SEC and the PCAOB's attitude to engage with us in searching for a solution proactively. So they're not even saying, hey, play it by our rules. They're saying, hey, work with us to come up with a solution. And it seems to me like the Americans are just saying, hey, do it our way or no way at all. Is that any way to further strengthen your relations with China? Or in this current environment, especially in this current environment with what's going on right now in the world, would you really want to try and further create rifts in that relationship? It doesn't make a lot of sense to me. And so with full respect for international norms as well as laws for both jurisdictions, so you see how the Chinese regulators are saying that they're going to respect the laws in both jurisdictions, and in the spirit of mutual respect and trust building, we believe the regulators will be able to find a solution to satisfy regulatory mandates of both sides, which will be in the best interests of global investors and sound development of capital markets in the two countries. Now, here's the thing. If you want capitalism to reign supreme throughout the globe, you have to learn to work with other countries. And it just doesn't seem to me like the US is willing to work with these guys right now. Now, look, there might be a lot of stuff that I don't understand that's happening in the background. And if you guys know more, please let all of us know in the comments below. But what it sounds like to me is that the Chinese are willing to work with the US within their boundaries, but the US is just not really working with them, and they're just setting these rules and these deadlines. And at the end of the day, all it's going to do is it's just going to cause a further rift between the two nations. And Charlie Munger, right-hand man of Warren Buffett, has even come on record and said it's really stupid that the Chinese and the Americans are not being closer friends and allies to each other. They would be unstoppable if they worked closer together. And so I don't like the direction that this is going. Now, let's move on with this article. So the reason why these Chinese companies were the first few to be named is because they were the first groups to have filed their 2021 annual report. So there's no reason why actually they're picking on fried chicken. I'm just making a whole mess about that. But like, it just so happens that they're the first group. That's all that is. And here's the problem. Here's where they run into. Beijing has actually blocked domestic companies and their Chinese auditors from complying with these types of requests from foreign regulators, which include the US. So now you're at an impasse where these companies can't comply legally with the Americans because of Chinese laws. So it's really up to the American government and the Chinese government to work this out, and the investors and the companies and all the employees and everybody's kind of held in the middle because these two government regulatory bodies, or these two governments in general, are not working together. So does that really make sense that we all suffer because these two government bodies aren't working together? It doesn't make sense to me. And the Chinese regulator went on to say on Thursday that it opposes the politicization of securities regulations by some forces. And it added that it had been in communication with US audit regulators to resolve the impasse over foreign access to Chinese companies' documents. So once again, it looks like China is trying to work with the US. And so they gotta drop these arbitrary rules and deadlines. Look, this administration, the Biden administration or the Brandon administration, whatever you want to call them, they're not the ones that created these rules. It was the previous administration that did this. So the current administration could easily say, hey, you know what? I understand what the previous administration was doing. We back them, but at the same time, let's try to figure this out as opposed to drawing hard lines. And the regulator added that we believe that the two sides can reach an agreement that aligns with law and regulations of both countries. So that's exactly similar to what they said in that report that I showed you that came from December. And of course, The Chinese regulator's focus here is protecting global investors, which I think should be the focus. I think the Americans should be thinking about protecting global investors as much as the Chinese are. And it doesn't seem to me like the Americans are with the route that they've taken. I understand that ultimately you do need good audit quality. I get it. I was an auditor. I have had audits that have been PCAOB reviewed. So I understand the process better than what a lot of people on YouTube, especially a lot of the value investors on YouTube, would be talking about with you guys right now. Now, because this happened, Yum China declined 15% on Thursdays. And Yum China already knew about this. They actually warned in a regulatory filing at the end of February that due to factors outside of their control, including the approval of Chinese authorities, its shares would be delisted from the NYSE in early of 2024. So that's really scary to hear from a lister that could be delisted for doing really nothing. And it furthers the argument that these companies could potentially be delisted, even though I don't think that they should be from the perspective of an investor. And let's continue on with this article, and I'll conclude at the end here. Now, Michael Lee, an analyst at Jefferies, said, the list is likely to lengthen as more and more companies publish their annual reports and provide details about their accounting standard. And he went on to say that investors recently have been nervous from many regulatory uncertainties in China, geopolitical risks involving China and the US, and multiple SEC-related inquiries involving Chinese stocks, all of which have increased uncertainty on Chinese stocks. And the only thing that I would add to that is the uncertainty from the China market slowdown in itself. So the fact that the Chinese economy is also slowing down. So there's a lot of reasons to fear investing in China right now, but it pushes the values down of their strongest companies to levels that I don't think you'll ever see in another generation. Now, this uncertainty has also led to a surge in secondary listings of Chinese companies in Hong Kong in the last 3 years, which include Alibaba, JD.com, and NetEase. Now, here's some good news for you guys. Baidu, Zylab, and ACM Research, 3 companies that were listed by the SEC, said they are working to be compliant with the law and fully expect to maintain their listings. So here's a situation where Beijing might have to back off a little bit and allow them to comply with the SEC, and so they can continue their listing. Now, I think with the bigger names, you're probably not going to have issues like the Alibabas, the JDs, the Tencents. I don't think you're going to have delisting issues. Do I think that all of the companies are angels? Absolutely not. One of the major risks of investing in China is the fact that there has been fraud in the past. And so you got to be very careful and selective with which names you invest in. And so I personally just stick to the big, large companies like an Alibaba or a Tencent or a JD.com or even Baidu, but that's kind of really where I stop. Now, overall, where do I see this going? Like I said, I don't think Alibaba is going to get delisted, but I do think that there's a potential for some Chinese companies to get delisted, and I think that the possibility of that is greater. So should all of the companies' shares trade off the way that they have? I don't think so. Does this change my opinion on Alibaba as an investment? No. At the end of the day, I don't think it matters if Alibaba is listed on US exchanges anyways, because even if they are delisted, you can just trade it on the Hong Kong Stock Exchange. Yeah, you might not get the valuation that you would get on an American exchange, but does it really matter considering that Alibaba is just straight buying back shares with all this excess cash flow that they're generating and the valuations are low enough that you'd get a really good return? I don't know if a high valuation really even matters to me personally over the long run, but you guys decide that for yourselves. So I'll leave it there. Now, what I will do is if you don't remember, it's been a few months, or if you've missed it, I'm going to link that video that I made on the Chinese regulator responding to the American regulator, and I'll put that video right here. All right, guys, I'll see you guys later.